For the banks, it's been a royally sorry year.
We've let you down where we haven't met that standard, and I'm sorry for that.
Yes, we have broken the trust of many of our customers, of which we unreservedly apologise, and there's no excuse for that.
The Royal Commission into Banking has exposed thousands of criminal breaches and billions of dollars stolen from customers. Now, its final report will reshape the landscape of banking in Australia. We're here inside the Commonwealth Law Courts in Melbourne, where most of the 7 rounds of public hearings were held. Each fortnight focused on a different topic, including superannuation, insurance, consumer finance and financial planning. Let's get started. The government opposed a Royal Commission.
We have made it very clear that we are not going to establish a Royal Commission.
But it was forced to change its tune as renegade coalition members joined the push and the Big Four banks relented, calling for the government to end the uncertainty. What it unleashed couldn't have been anticipated.
For them to do that to their customers is absolutely and utterly disgusting, and I hope no one ever has to go through it again.
Ms Livingston, how concerned are you about criminal charges?
Everything that was done in there, you've done worse to me.
Commissioner Kenneth Hayne sat on the bench of the highest court in Australia and does things by the book.
You will not give her her answer, Mr Young. You will not. Do you understand me?
Senior counsel assisting, Rowena Orr QC, rocketed to national prominence through her relentlessly fierce questioning.
Let's be frank, Mr Wardren, there was fraudulent conduct engaged in by NAB bankers and by introducers. Do you agree with that?
Yes, there is, yes.
And the baby-faced assassin, counsel assisting Michael Hodge QC, made executives sweat as he dredged out torturous details.
And so by my count, this was the 14th false or misleading statement by AMP to ASIC. You're losing count.
I'm in your hands in that regard, Mr Hodge.
Over 68 days of hearings, 134 victims of banks, senior executives and the regulators charged with overseeing them answered questions. New laws have been proposed, increasing jail time and fines payable for corporate crime, while at the same time the banks have been punished for their sins. From the time the Commission began to when hearings ended, the share prices of the Big Four and AMP have taken a pounding. That's just the share price. A crippling list of billion-dollar scandals has led to class actions, litigation from regulators, and the potential for civil and criminal charges.
Charging premiums for life insurance to someone who's dead. That's the position, isn't it?
Yes, that's the way the system is treating it today.
I saw him depressed for a few years. That's why I'm here today, because he couldn't come in.
So this was conduct that was acknowledged by NAB to be misleading and deceptive, or likely to mislead or deceive.
And the shocks kept coming. One in particular.
Another day of extraordinary evidence of misconduct by the big banks.
The Commission heard Westpac encouraged one woman to sell her house based on incompetent financial advice.
The Commission heard of customers being charged for financial advice even after they died.
It was brief, but it caught fire.
The summary is ongoing services have not been provided to clients. One file client dies in 2007. Contact made with deceased wife in 2013, but no action taken. And the action plan is, or at the bottom, based on the above, recommend a formal warning be provided.
Yes.
Advisors at the Commonwealth Bank's financial planning business charged fees for personal service to customers they knew had died. In one instance, the fees were charged for more than a decade.
How could this happen and it not be something that people further up the chain were aware of or cared about? And why is it then that it suddenly, when it happens in one institution, it comes out as known everywhere? It's supposedly a huge institution, but there's a remarkable number who are doing the same thing, and it makes you wonder about how big the industry is really when you hear these things.
The bank wanted to make it legal by changing the terms of accounts, so customers, still alive, would sign off on paying fees when they died.
That is what AIL thought that it should do, is in the product disclosure statement say we will continue to charge advisor service fees after the member has died.
Yes.
But it hadn't done so.
Correct.
And so it formed the view when it's reviewed the issue this year, and in fact it had formed the view, I think, to be fair, back in 2015,
yes,
2016, that if it wasn't telling members that when they died it was going to continue to charge them advisor service fees, that it shouldn't have been doing so.
That was in 2015, and on this review, the conclusion we made was that the practice should cease and should never have occurred.
It was the icky end of an issue that exploded into a multi-billion-dollar scandal. Fee for no service is what it says on the tin. It's taking a fee for a service that isn't provided, won't be provided, or can't be provided. But it's worse than that. Imagine if you went to the doctor and they took a blood test. They said they'd examine it, and in fact, they'll test it into the future to ensure your ongoing good health. But instead, they do nothing. They charge you, and they give you a false sense of security about your health into the future. That's fee for no service. Initially, fee for no service was thought to be contained. In December 2017, just before the Royal Commission began, the Australian Securities and Investment Commission estimated customers were owed refunds totalling $219 million. By August, that payout was $364 million. But the institutions kept digging and estimated the total bill a jaw-dropping $850 million.
We've had 27 investigations as part of that project. I think we've collected more than 2.5 million documents. You can see that we've obtained hundreds of millions of dollars so far in remediation, and more to come. It doesn't give me any pleasure to say this, but I wouldn't at all be surprised if it ends up being in excess of $1 billion.
It gets worse. The repair bill for AMP alone will cost $1.2 billion. About half in compensation, the other half in sorting it out and fixing the problems.
And that means it's continuing to remediate on the basis of an approach estimated to take 9 years.
Yes.
And AMP has just found a similar problem in its superannuation division.
I think there was reporting up the line to, for example, the legal department in the case of the AMP, but I don't know that it was taken with the degree of seriousness that we looking out as members of the public would be concerned about. I think ultimately what it was seen to be was a, quote, compliance issue, and immediately that you use that term, it kind of neutralises the moral quality of what's going on.
One of the Royal Commission's biggest impacts has been on the housing market. It started when ANZ was accused of breaking responsible lending laws by not verifying the living expenses of mortgage applicants.
Our processes are we do nothing. There are transactions on those statements that are inconsistent with the statement of position, and we don't do anything.
Well, do you think that's satisfactory, Mr. Rankin?
I personally do, yes.
Even when ANZ customers were applying for home loans, the bank still didn't check their living expenses to see if they could afford a mortgage. Instead, they used the HEM, the Household Expenditure Measure. It's a benchmark for how much people spend in a month, but it's a low-ball estimate of people's living expenses. What this means is the bank, all of the big banks, were giving people more money than they could afford to service. And that poured petrol on an already hot housing market. Banks quickly reduced reliance on the HEM figure and have started being more rigorous in assessing mortgages. meaning customers were offered smaller loans.
A new report from the competition regulator has found home loans from the big banks are uncompetitive and too complicated.
The Commonwealth Bank has admitted that home buyers who get a mortgage through a broker can end up paying more.
Taylor made nearly $500,000 in commissions from the National Australia Bank for signing people up to dodgy loans.
Reducing the size of home loans was called a contraction. In fact, it was what they should have been doing all along, following the law.
We've always relied on the goodwill of banks to operate within the law, but what's actually happened is, over the last period, as Ken Hayne said in the interim report, we've found that their desire to make money has been at the expense of basic standards of honesty. So when we go to that system and say we assume that banks will self-regulate, we now have evidence that they don't, and that if we leave it to them, we'll get more of the same.
By making it harder for people to get large loans, and with potential changes to the mortgage broking industry, don't expect the Royal Commission's recommendations to pump up the falling housing market in 2019.
27 ordinary Australians were selected from more than 10,000 submissions to discuss their personal financial problems and their interactions with banks and financial institutions.
So in around November, December 2014, I applied for my first credit card.
Problem gambler David Harris racked up over $35,000 in debt on Commonwealth Bank credit cards. Despite pleading with the bank to stop giving him credit card increases, they kept coming.
I tried to reach out for help and I didn't get any. I got the opposite. I got more credit limit increases sent through. When I tried to tell them I had a problem.
I can't believe this. I've been to see the Financial Planner of the Year and this is what you get.
There was even another commissioner. Donna McKenna's job is as a Fair Work Commissioner. But the financial advice she received from Sam Henderson was so bad, it would have cost her $500,000.
I just want to know what my current balance is, please. What is the amount I can roll over?
Was that Ms McKenna calling?
No.
Was that your customer service officer impersonating Ms McKenna?
Yes.
Did you know that your employee was impersonating Ms McKenna, Mr Henderson?
No, I didn't. For the record, that I was not aware of the impersonation. I was quite disappointed and I certainly apologise for that behaviour of my staff member. I was incredibly disappointed. It was inexcusable.
Mr Henderson's staff impersonated her and a complaint about his advice to the industry body went nowhere.
If someone with my educational and occupational background hits a wall when you endeavour to engage proper disciplinary processes, what hope are other people going to have?
I've got elders that have been in these funeral funds for years and they've planned to give the money to their families so that they can survive.
Tracy Walsh took out funeral insurance from the Aboriginal Community Benefit Fund. The private company is not Aboriginal, has breached federal court orders, shrugged off scrutiny from the regulators, and sells policies to babies that could cost as much as $100,000 over a lifetime. Like thousands of Aboriginal people sold the product, Ms Walsh thought that if she died, premiums paid over years would go to her family. They won't. At best, the policy will only cover specific costs, like a casket.
But by God, when people find out about this in my community, they're going to be angry. They're going to be scared. I've got an elder that's been in a funeral fund for years. And they're only going to get their policy back. These people have been used and used and used over the generations. And it's just another profit making off our backs.
Thousands missed the chance to tell their story. Farmers, in particular, were angry with the short amount of time set aside to examine complex and long-standing issues. Farmer Bill Mott from Meandara, 400 kilometres inland from Brisbane, lost his $22 million estate in a dispute with NAB.
Well, it's cost me my marriage.
The second would be that it's isolated the children. It's not only isolated them from me, but also isolated them from each other.
Stories like Bill's were among the 10,000 submissions not aired at the Royal Commission.
There's real pain, and I don't see that they are ever going to get to the bottom of the real problems in that short amount of time.
There was no extension. The final day of hearings was held a year to the day the Royal Commission was called. The biggest scalp claimed by the Royal Commission is clear. 170-year-old financial services giant AMP. The hits came early, often and hard.
And again, by my count then, that brings us up to the 15th false or misleading statement by AMP to ASIC. I take it you've lost count now, Mr.
I'm keeping count with you, Mr. Hodge.
Thank you.
Misleading the regulator and taking hundreds of millions of dollars in fees for no service from its customers brought the company to its knees.
Catherine Brennan, can we just get one question, please? Do you think you should resign now? Catherine Brennan, it seemed the shareholders would like you to resign now. Do you think that would be the best thing for the company? Do you think it's the best time to resign now, Ms. Brenner?
Revelations that the chair, Catherine Brenner, had interfered in a report meant for the regulator exploded.
I spoke to Catherine earlier today. She said that she relayed a number of comments to you over the phone last week and confirmed that she has no more. Can you please let us have the next draft with amendments marked up today? Why would the board be approving changes to an independent report?
Because it was a report being accepted by the board.
Include a statement to the effect that Craig Mellor was unaware of the practices or their illegality.
The planned resignation of then CEO Craig Mellor was brought forward. Catherine Brenner resigned as chair, and AMP's legal counsel found out he'd been booted from his job by a statement to the stock exchange. The response from government was swift.
They are not victimless crimes. They are not. They are not some sort of lesser crime. I mean, the impact that can occur to individuals, and very large numbers of individuals, is very, very serious. And so if there's a potential complacency about behaviour in institutions, we need to set the tone through the law and the penalties that applied so people understand that misleading regulators about serious issues such as this is no victimless offence, and it won't carry a victimless penalty.
New penalties were announced, including a maximum of 10 years imprisonment and a fine of up to 10% of a company's annual turnover. But that wasn't the end of AMP's problems. Even after confessing to the regulator and paying back the money, AMP couldn't stop lying to its customers. A script for use in call centres showed workers were told to tell customers the refunded fees were an administrative error. They weren't. The $2.6 trillion superannuation industry is another field that has felt the blowtorch of the Commission. Newellus looks after super for NAB, MLC and other funds. When millions were taken from customers in fees for no service, it assisted the bank to try and keep the funds by retrofitting a service to meet the legal requirements for the fee already taken.
Because they go to the question, is it possible for NAB Wealth to retain these fees notwithstanding that there is no linked advisor?
Well, that's one of the questions.
That's the only question in every case, isn't it?
No, it's not the only question.
NAB broke the law 84 times between 2014 and 2017 by not telling ASIC about the scandal within the legal deadline.
Did you think yourself that taking money to which there was no entitlement raised a question of the criminal law?
I didn't.
Go on.
Mr Hodge recommended to Commissioner Kenneth Hayne that NAB face criminal charges for misleading and deceptive conduct over the fees. Australia has 3 regulators working the beat on financial crimes. the Australian Competition and Consumer Commission, the ACCC, was largely left alone by the Royal Commission. The Australian Securities and Investment Commission, ASIC, and the Australian Prudential Regulation Authority, APRA, copped it. In his interim report, Commissioner Hayne didn't hold back.
When misconduct was revealed, it either went unpunished or the consequences did not meet the seriousness of what had been done. The conduct regulator, ASIC, rarely went to court to seek public denunciation of and punishment for misconduct. The Prudential Regulator, APRA, never went to court.
Do you think that large financial service entities fear the regulator?
Until this point, and we're talking about ASICs principally here, I think the answer is they don't. And they have reason not to. There's just, sure, there are concerns raised. There's a need to go in and take action about them, but it's never very severe. It hasn't affected them in any really inconvenient way. And the evidence suggests, because of resourcing, it's unlikely to into the future.
Both ASIC and APRA have been found wanting. But court action against the big banks is expensive and risky. Even if the regulator wins, it doesn't guarantee consumers will get their money back. Instead, the regulators have relied on enforceable undertakings, essentially negotiated settlements, to stop problems and remediate customers.
Here's an example. ANZ got its bank tellers to sell superannuation. They knew it was wrong. How? Because the bank's own chief risk officer called the risk extreme and begged the executive not to approve it because it threatened the bank's entire licence. The scheme raked in $3.6 billion until it was shut down. The bank kept the money and accepted an enforceable undertaking with a fine of $1.25 million.
Oh, that's too little actually. It's like, what, less than 1% even? Yeah.
Do you think that would change their behaviour?
Not really. It's like even less than 1%. If we $10, we lose 1 cent. We don't feel like anything, right? Yeah.
Yeah, nothing. It's peanuts to them. Yeah, what else can you say?
How much did they make out of it?
3.6 billion.
3.6 billion. So they should obviously be fined more than that. So was it $5 billion fine?
It was $1.25 million.
Is that it? So they made that much money and they only made 1.5 million. That's absolutely unfair.
But I bank with ANZ, which means I'm a loser anyway.
Well, not really. You've won because the fine was so small.
But it's still a fine, and somewhere they're going to have to recoup those monies, and they're going to hit me for it, aren't they, in fees? Mortgage repayments.
It was 1.25.
Oh, wow. Is that all? Yeah, nah. It should be at least $50 to $60 million, yeah. And I think the executive should be accountable for what they did. Yeah, they should be prosecuted as well if they have done anything unlawful.
How much do you think the fine was?
Probably about 1.2 million, not much compared to what they should be paying.
That's an incredible guess. That's exactly what it was.
Oh, there you go. Oh yeah, do I win something? No, I'm kidding.
What do you think would be at an appropriate level where people would stop doing things that they know are illegal?
From the CEO down to the relevant level, jail. Simple as that. Money doesn't come into it because banks are making that much anyway. It's irrelevant. So jail time. Same as any CEO of any company now under WorkSafe spends jail time for breaching that.
When petty criminals commit crime, they generally go to jail and there's no negotiation. When financial institutions break the laws here and potentially steal millions or tens of millions of dollars of Australians' money, they've got to negotiate their penalties with ASIC through enforceable undertakings. Should this continue?
Thank you for the question. There is a very relevant debate to be had about any type of enforcement tool that we're utilising.
New ASIC chair James Shipton has vowed to cut back the use of enforceable undertakings and take more companies to court.
That it's very clear to me that we need to be more agile, willing and faster in applying court-based enforcement actions.
Does that answer me?
But he'll have to overcome the regulator's history of limp enforcement and dragging its heels.
I'm sorry, can I just go back? Did you just say in a timely way? That's correct. You had a proceeding drafted in May of 2017.
That's correct.
You entered into an enforceable undertaking with ANZ at the end of July 2018.
That's correct.
You had begun investigating this in June of 2014.
That's correct.
Surely you don't believe that that is a timely resolution?
What I'm saying is, and I'll certainly concede that we need to do things quicker. However, there was no guarantee that if we had have gone to court in May 2017, that we would be anywhere near resolving the matter.
Where does that leave us? Currently, banks are undertaking billions of dollars worth of work, fixing old systems, building new ones, and paying back money they've taken from customers. Meanwhile, APRA has taken its first court action in a decade. Fund manager IOOF is accused of breaking the law, and the regulator is looking to get CEO Chris Kelleher, the chair, and 3 executives banned from the superannuation industry. There's also an understanding in banking that the Royal Commission's spotlight has shown change is needed.
Yeah, because we've got to get this right. We surely can't have this every year. We've got to build our own.
We all agree on that.
I think there has been that public shaming and accountability, which is the course of the Royal Commission, which will be very effective for a short period and in making boards very attentive, and boards of banks, to all of the concerns they have, and principally the customer. And you've heard all of the chairmen and executives of the major banks talking about this. But memory is a short thing, and I think that I would be more reassured that they were going to do that on a longer term basis if we saw fundamental changes occurring right now.
The Commission's final report will be delivered by February 1st. It could contain recommendations of criminal charges against individuals and organisations. Almost certainly, it means the end of some practices that have been lucrative for banks but detrimental for customers. All of this dropped into the tinderbox environment of an imminent federal election, at a time when the Big Four banks could scarcely be more on the nose with the public. 2018 was a year of Hayne for the banks. 2019 could well be a year of pain.